Welcome to the Value Investor TV podcast. This is the podcast that helps you grow your wealth and become financially independent. My name is Becco, and my partner, street fighter, Hari himself. Hari.
Becco's investments have clearly been paying off. He's got a fancy jacket and
I know. Check it out, guys.
Nice watch. So things are working out well for him.
You know what that means? You got to listen to the Value Investor TV podcast if you want to get to my level, guys. Yeah. Okay.
And don't listen to me because I just got a Street Fighter T-shirt.
The real rich people, they don't have to flaunt their money. That's the issue here. So Hari, he's a real man. He's the man of the hour.
Well, we're talking about GameStop. What better T-shirt than when we're talking about GameStop is Street Fighter.
That's it. Yeah. So. Before Hari spilled the beans already. So we're going to talk about GameStop, guys, today. But before we do that, I think we should do a quick disclaimer like we always do. Hari, you want to take that one?
Yeah. So this podcast is designed to help you, educate you, and inform you on how value investing works. It is not specific financial advice, and we are not a financial advisor. We encourage you to discuss this with your financial advisor before making any investment decision.
Perfect. All right, let's get started. All right. Also, before we start, this is another one of those conventional episodes where we pick a company and we talk about, we go through the checklist basically to analyze the company at hand. And as we mentioned earlier, this week we're going to talk about GameStop. But the way that we analyze companies is pretty methodical. So we want to make sure that we're checking all the boxes and going through the checklist. And by checklist, I mean, we have a checklist that Hari and I put together with other inputs from our community. And so if you don't have the checklist, please email us at info@valueinvestor.org. Again, info@valueinvestor.org, or tweet to us at valueinvestortv. That's our Twitter handle, Value Investor TV. So make sure you reach out to us.
Yeah.
All right. Hari, actually, this is, I guess, maybe it'd be a good thing to mention up here. This is a company that came to our radar a long time ago, but we really got a request from one of our listeners to cover this company. So, I think it's good to mention that community engagement, you guys reaching out to us on companies that we should cover, it helps us and also engages more directly with you guys. So we encourage all of you to send in your list of companies that you want us to analyze, so we can build this community of investors here at Value Investor TV. So let's get started, Hari. So the first question is in the checklist. Can you explain to us what GameStop does?
Can I?
Can you?
So GameStop is a retail chain that sells new and used video games, video game accessories, collectibles, and they do that in the U.S., Canada, Australia, and Europe through 5,000 or so stores, and online through the GameStop name, as well as through ThinkGeek and EB Games and Micromania. So those are the brands that they operate under: GameStop, EB Games, Micromania, and then ThinkGeek stores, as well as on e-commerce. So GameStop has been around for last 20 years or so, and has been kind of a retailer that's focused purely on the video game culture. And then recently they got into the cell phone game and started selling through Sprint or Spring Mobile stores, which they got rid of last year. So they sold that off. So now they're back to focused on video game and the video game culture, geek kind of culture, through retail stores, so brick and mortar as well as e-commerce. And I forgot to mention, in Europe they also use under the brand Zing Pop. So if you're out in international markets, you may see ZingPop, ThinkGeek locally. And that, so how they differentiate themselves from, say, selling games at Walmart, Target, Amazon, etc., is that they sell new video games, they sell new video game hardware and software, but they also sell pre-owned video games and hardware and software. So you're going to be able to buy a game from GameStop and then sell it back to them at a pre-owned price. As we'll talk about that, the pre-owned market is actually, sells much cheaper on a gross basis, but it's a much higher margin for them. So they're selling pre-owned games usually between $15 and $20, whereas new games are closer to $40. They also sell video game accessories, and they're recently have been starting to sell more digital assets that you can buy in the retail store and then redeem in game on Sony and so PS4, Xbox, and Switch. So that includes, money that you can use towards buying digital currency or digital assets. And then they also sell collectibles. So, the Funko Pops and, that kind of stuff is where they have a lot of, that, as well as statues and things like that. So they sell a little bit of that in their flagship GameStop stores, as well as their ThinkGeek stores where they carry a lot more of that kind of, stuff.
Mm-hmm. Yeah, so if I could kind of just high level summarize the product categorization, at least this is how they report it in their filings. You have the new video game hardware, you have new video game software, and then you have the used market, pre-owned / value video game products. That's the third category. And then the fourth category is video game accessories, fifth, digital, sixth, collectibles, and then lastly, every other product that they sell, they categorize it under other products. So again, like Hari mentioned, it's a pretty broad scope, starting with the new products all the way to collectibles and pre-owned. So I think it's a company that's kind of uniquely positioned in the gaming market that covers the entire spectrum. Would you say?
Yeah. That the interesting part about that is that, because they cover new as well as pre-owned, pre-owned also includes older consoles that may not necessarily be making newer games. So, you can still get Nintendo DS games. You can still get, but they don't carry the older, the oldest. So you won't be able to get original Nintendo or Super Nintendo games there. For some of their market, they may be the only retail store in your area to carry video games, brick and mortar store. So that, there is some benefit there that they have over competitors where they're able to stock a larger inventory of games at the store, and they have pre-owned. Recently they've actually been they've been carrying a lot more of these video game accessories, which is one of the only parts of the business that's growing. And these are premium accessories like headsets for playing online with with friends, like on Fortnite and in Apex Legends. A couple other areas that they are in as well is that they have a loyalty program. The loyalty program gives you rewards, and you can pay between $9 and I think $30 for different aspects of the rewards program. And what it does is it gives you more discounts on the pre-owned accessories and higher trade-in values when you use that. So about 5 million of their rewards members are paying customers, so they're getting it's a high margin part of their business. They also sell a magazine. It's the largest magazine subscription in the country, which is a strange distinction, but you're buying that with your GameStop Power Up membership. So you just kind of get it automatically, and it's either digital or physical copy. And so they are. What is interesting about this whole market is that there's a transition into the digital space where people are buying game assets online instead of buying the games in a physical store. And And GameStop has had some ability to capture that market, but it doesn't seem to be a big part of their business still.
Yeah, I think that's really interesting. I think GameStop is kind of interesting in that, you are this whole retail industry, I guess, not just gaming. The entire retail industry is kind of really going through this transition, and every other retailer out there is trying to get more online interactions and things like that. And certainly, I think GameStop is in that transition period.
Yep.
But I think what you mentioned earlier about this is really uniquely kind of positioned company because it sells used as well as old, used as well as new, and it covers the whole swath of gaming and this kind of nerd geeky kind of game culture that they promote. And so kind of and when I'm thinking about this, I think about how can they compete in a very competitive market landscape of retail. So I think that's a good kind of transition to our next question which is, does the business have a competitive advantage? As a value investor, we need to be looking out for competitive advantage. As we know it, we call it the moat. So could you answer that question for us? Does the business have a competitive advantage?
Yeah. So, the problem with being a retailer is that unless you're some sort of low-cost supplier, in retail, it's pretty hard to have a moat, right? Brands sometimes help. And, like in the case of Costco, where they sell a lot of their store brand, which is Kirkland, easier to maintain a moat there because they control the cost of the goods that they sell in the store. When you look at a company like GameStop, Sony, Microsoft, and the top 10 vendors account for 78% of their sales. So they're heavily dependent on games that come out on a consistent basis and new game hardware. So when new hardware comes out, people tend to buy a lot more stuff. Related to the hardware. They need accessories, they need new video games. People tend to be more excited about it, and they're heavily dependent on the sales cycle around new games that are coming out. So, they mentioned in this recent conference call that the single game Call of Duty had a big impact on their year-over-year earnings. So, in 2017, when Call of Duty came out, it had a big surge in sales, and then the following year there wasn't an equivalent title to help them cover that. So even though there's lots of different vendors out there all making games, what we're seeing is a lot of people who are buying games are buying, first off, they're buying games like Fortnite, where the business model is no longer paying up front for $50 for a game. You're buying in-game assets and you're downloading the game for free. So you're not, it's a different model that we're going into where there's this, and what you're also seeing is a lot of those games are actually being purchased through digital distribution. So Steam on the PC or the Sony Microsoft Store, concept. So GameStop doesn't do a lot of PC sales, but when we're talking about this now, for the Nintendo Switch, they saw a big uptick in 2017 when the Nintendo Switch came out. But they're not seeing the benefits of the software because a lot of people are still buying the software online. So, looking through our different competitive advantages, I just don't see anything here really. Like, they have a rewards program that kind of helps you stick to buying stuff. I will say that it's actually a very compelling value to use that. I'm a member. I have a GameStop Rewards membership, and I buy basically all of my games in the physical store. Now, I'm a dinosaur when it comes to that kind of stuff. I don't buy stuff because I like having a physical cartridge, because then what I do is when I'm done with the game, I go and sell it back to GameStop and then buy the new stuff with that credit. So a lot of people don't do that, right? They're buying stuff online because it's more convenient. They don't have to get out of their house. And that's just where the industry is kind of shifting towards. That doesn't mean that that it's necessarily disappearing, that GameStop's business is disappearing. I mean, they're still I mean, their growth is they're slowly shrinking revenue, and they're closing stores as they're seeing the profit per store kind of decline. But I think really the biggest aspect of this is that their revenue, it's just the landscape of gaming is changing, right? In 2012, 2013, digital distribution and bandwidth was not available to really do it. 2019, 2020, whenever the next Sony and Xbox come out, I think you're going to see a lot more people using digital, stores to buy their stuff, and that kind of leaves GameStop out of the mix.
Yeah, it's interesting. I think for retail, for any sort of retail, online presence is becoming a bigger element of their business. And for non-content owners, I think this is the case for a lot of these other retailers as well. It's just a kind of a third-party retailers. Skechers we talked about, Great Canada or Canada Goose we talked about. Those content owners, they're another way to look at them is they're content owners of their own products. The content owners themselves are opening up their own retail offerings via the web or their own retail brick and mortar stores, and the reason for that is because they can deliver highly controlled customer experience, but also on the back end, it's a higher margin business.
Right.
And so I see a lot of retail space, a lot of content owners. So that may be the gaming industry or the clothing industry or the shoe apparel industry, generally speaking. The content owners are creeping into the retail space because it's a higher margin, better user experience, et cetera, et cetera. And I see the exact same thing happening here with the gaming industry.
Yeah, I think a good example of this is and this is a post that you can go and read online. There's a video game called Shovel Knight that came out about maybe 3, 4, 5 years ago by a company that was an independent game maker, and they distributed their game digitally as well as in brick and mortar stores, and the thing that they realized when they were doing this is how much less money they were actually making on the game. So there's a blog post out there, and I would encourage you to read it. Just from a business kind of standpoint, their digital sales were giving them $15 per game or something like that after the net fees that they had to pay the store manager or the store like Steam. But they were making like $5 for a game that was sold at GameStop because of packaging. GameStop has a markup, that kind of stuff. There was a lot of infrastructure that was involved just to get their games to the store, and now companies can eliminate all of that and sell it through a digital store where there's no packaging, there's no fees, there's no shipping, there's no all the returns are dealt with, digitally. So, this concept of, I just don't see GameStop being able to stop this tide. And I think they would be the first one to admit it in their conference calls. They're saying, new games aren't coming out. So largely what they're going to be able to make money off of going forward is new hardware sales, which unfortunately, console manufacturers are coming out with those less and less frequently. So whenever the next console cycle comes out, the Nintendo Switch kind of came out in between, 2 years ago, and they saw a big uptick in hardware sales. But I don't think that's going to last. Software was kind of where they would make all their money, and right now I think that's going away. Yeah,
it's interesting. It almost seems like maybe this is kind of a divergence, but I want to bring this to the discussion, which is, when we talk about Ulta Beauty, Ulta Beauty is another one of these retail stores that collects all kinds of beauty products into their own store, and they're basically a retail operation.
Yep.
And take that, and then that's one side, and the other side is what I just talked about before, where the content owners are pushing into the retail space.
Right.
Ulta has some sort of protective moat because of the fact that they are carrying a whole bunch of a whole bunch of cosmetics, boutique beauty product or mass produced product. They carry it on their retail brick and mortar stores, but also they provide all kinds of services within the store, so it attracts customers to the store. I wonder if you look at it from that light, how GameStop kind of stacks up to the competitive edge that Ulta has, because at GameStop they also do have a variety of games, but they also like Ulta Beauty, they provide users to come in and play the games there, and it's more than just transactional retail.
Yeah, there is some aspect of a community that they can produce where they have, but for the most part, they're you can try out the games there, you can play them on their demo stations, things like that. But I've also seen that at Best Buy, I've seen that at Target. I don't know if I've seen it at Walmart, but that is not a unique experience to GameStop. I think one of the things that GameStop is going to struggle with is, Ulta is able to sell physical cosmetics. You can't digitize that, right? I can't digitize lip gloss,
Yeah.
And, software is something you can. And, for the first 40 years of gaming existence, 50 years of video game existence, you had to buy those in the store. I just don't see that being something that can continue, right? And, you're still going to need to buy the console, but that's a purchase that you make every 7 or 8 years, and you pick up a few accessories here and there. GameStop will have a much smaller footprint, I think, in terms of they have 5,000 stores now. So it's a tough. This is a business that I would struggle with. Kind of looking at as a how long is the end? And how with the money that they have built up, can they transition to something new? And that there's a lot of risk associated with transitioning, right? To a different business model, because right now they've established a brick and mortar retail store. And they actually alluded to this on their conference call, that they're setting up an esports complex in their headquarters in Grapevine, Texas, and what they're doing in Frisco, Texas, where it's going to be a training ground for esports, and they're going to use their retail stores to kind of initiate some sort of you can go there to get help, get better at a certain game like Fortnite. You want to learn how to play it better.
That's interesting.
I just don't know how that's going to work out. Maybe it does, maybe it doesn't. So anyway. Yeah,
that's kind of the future. The thing with companies, I think, this goes back to one of the very first episodes that we did. One of the reasons why we like to invest in companies is because companies are dynamic. This dynamicism of companies, they can adapt to different things, whereas other asset classes, other assets that you might purchase, they don't have that dynamicism. So this is, if they are able to execute strategies that allow them to adapt to the new age of digital distribution, that's dynamicism in action right there. Anyway, let's continue down the list. So we talked about competitive advantage, the risk of the current competitive edge. I think all of those we kind of touched on. So if we could go to the next question, which is the long-term prospects. And we talked about this also, long-term prospects and runway for growth. Do you have any other additional comments to make on this one?
Yeah, so, at this point in our checklist, we have made the distinction that this is not a business that we would look at as a traditional, what we have talked about as a great business at a fair price. This checklist is kind of designed to look at value investments as ongoing business concerns. And in the case of that, you want a great business trading at a fair price. This is kind of a different setup, right? We are now talking about a mature business that's probably not going to have a long-term runway for growth. So now, really what we're going to be looking at, I would say going forward is, I would stop here on the checklist and kind of move towards a more, financial focus on the business in terms of, what does the balance sheet look like? What are the current operating purview, what does their operations look like, and how long will they be able to survive, given their setup, right? I mean, this is a business that doesn't have long-term prospects that I would be comfortable with. And so you kind of reach a dichotomy of what do you do with a business like that, right? Mm-hmm. The stores are still profitable. 99% of their stores are profitable, but their profit per store is shrinking. So what do you do in that situation? And I would say, in my opinion, I'm less interested now in what is management's money position, that kind of stuff. And I want to see, do they have assets on the balance sheet that they can return to shareholders? Because they shouldn't be reinvesting that money in the business. Mm-hmm. Yep. So this is kind of where, obviously the business is being beat up on Wall Street because they're saying, oh, they're gonna go bankrupt at some point. So, which I don't disagree with, that they'll eventually have to stop operations. Every business does. So what do you do with whatever money you have now, right? And that's the question that we need to kind of answer.
Yeah, I think that's a good transition to the next episode, because like Hari talked about, I think this is a really interesting company that's kind of in decline. So at this point, like Hari mentioned, we need to be looking at the way we assess companies really totally shifts at this point. We're looking at the balance sheet. We're looking at assets that we could possibly obtain. And this might be an angle through which you look at how Wall Street might have missed something in the balance sheet. For example, this might be the case where there's a hidden asset in the balance sheet that Wall Street totally missed, and we could take advantage of this negligence. So anything else? I think this is a good stopping point for our next episode. Don't you think, Hari?
Yeah, I think we can, stop here, and on the next episode we'll kind of talk more about valuation, and how do you value a business like this.
Mm-hmm. Awesome. Thank you so much, guys, for listening, and we'll see you on the next episode.
Yeah.
Thanks, guys.
Thanks.